Mr. Smith, I'm very curious, why would someone, a lender, why would they work with you rather than directly with the borrower?
Well, great question. First of all, they have years of building up defenses against borrowers who call in, and they pretty much presuppose that that borrower is just trying to take advantage of them or take advantage of the market situation. So they tend to defend or push off just out of habit. That and, you know, a borrower typically doesn't know what to say to these people. That makes sense. When our firm goes in there, we go in there with a plan, and they have some compelling reasons to listen. First of all, they're looking at a lot of legal fees. So if they go into a commercial foreclosure, they know that that's going to cost them money. And it costs them money even if they have in-house attorneys. No matter what they do, if they get into a litigation process, it's going to be money out of their pocket. And it's not a short process. Loan modification is relatively short. It's concluded simply in a matter of months rather than years. The next thing is, let's assume they foreclose on a hotel, for example. Okay, they foreclosed it. The owner's gone, he's out of there. What do they have to do? Well, they have to get somebody in there to manage it. And that's not inexpensive. And that's not their expertise. So typically they'll, you know, have to spend additional money managing property. I know cases where they hire back the original borrower to run the property, and he makes more money doing that than he did paying the note. They have to maintain it. If something goes wrong while they have that property in their possession, they've got to repair it. Let's say it's an apartment building. Now they've got to go around and collect money off of tenants rather than one mortgagee. So that's another process that makes them crazy. They like the idea of working with one tenant rather than, or one mortgagee rather than, you know, maybe 50 or 100 tenants. Bank examiners love to see performing loans. If they get a loan restructured in such a way that is performing, that's one less little feather in their cap when they talk to the bank examiners. They don't have, you know, the balance sheet's not affected the same way because the loan's producing. And that's kind of important to them from the standpoint that they don't have to have a loss reserve in place. So they've got more money essentially to lend. If they own that property and they want to get rid of it, there's protracted marketing. You know, you just don't put up a little sign and say, hey, you know, 300-room hotel for sale. There's a lot of marketing and commissions and advertising and promotions. It just is going to have to be spent in order to market the property. Plus, while they have the property, they're facing a lot of uncertainty. Here in Florida, for example, it's scary. What if this oil thing hits the beach while they're holding the property? What if a hurricane blows through? So all the while they're holding that property, there's a lot of uncertainty. Some foreclosures are really risky from a public relations standpoint. If you don't believe me, watch what happens when some bank goes to foreclose on a church. I mean, it's not really a good look for them, and it's a major concern. And, you know, loan modifications are relatively easy and quick. And it's a quick way to save both the owner of the property, who's trying to operate it and make a living, and his assumptions have essentially shifted by an economy nobody anticipated. And the bank benefits from not having a loss that's just like an extra bag to carry. And I hope that answers your question.
Well, so let me just recap. What I hear you saying is that you know the ins and outs of what a lender would have to go through in order to foreclose and take a property back, and you basically use that to get the lender to see the light of day on how a loan modification would just simply be a better choice.
Exactly. And of course the real key here is they know that we know.
Of course. So if someone wanted to get started, what do they have to do if they want to use you?
Not a problem at all. They just call or go to our website, houserescues.com. There's contact information on that website, houserescues.com. They also can do some Googling. I've been around since Moby was a minnow, so, you know, they can look up Timothy P. Smith, Total Personal Satisfaction, and we'll go from there.
Thank you.